This is not a typical fraud case. It is one of the largest banking scandals ever recorded. At the center of this case is Truong My Lan, a powerful real estate developer in Vietnam. For years, she operated at the highest levels of business and finance, and during that time, a massive fraud was taking place. Investigators later estimated the scale of the damage, $44 billion. The case involved a major Vietnamese bank. Through a complex network of shell companies, false loan applications, and manipulated records, the bank was systematically drained of funds. Authorities determined that Truong My Lan effectively controlled the bank without officially owning it. This allowed her to bypass regulations and avoid oversight. Loans were approved without proper collateral. Many borrowers were not independent businesses. They were connected entities. Companies created solely to move money. Over time, the amounts increased. Small irregularities became massive losses. But warnings were ignored. Audits failed. Regulators did not intervene in time, and internal controls collapsed. By the time the fraud was fully uncovered, the damage had already spread through the financial system. This was not a sudden crime. It unfolded over years, quietly, systematically, with coordination. The investigation revealed how power, influence, and weak enforcement can combine to create systemic financial abuse. Truong My Lan was eventually arrested and brought to trial. The charges included banking fraud, embezzlement, and violations of financial regulations. The court found that the fraud threatened economic stability, not just one bank, but public confidence in the financial system. The sentencing reflected the seriousness of the case. It sent a strong message about accountability at the highest levels of business. This scandal raised critical questions. How could such losses go undetected? Why were safeguards ineffective? And how much influence can powerful individuals hold over financial institutions? Experts point to several failures: weak governance, insufficient transparency, and regulatory systems that relied too heavily on trust. When oversight fails, financial systems become vulnerable, especially when insiders can influence decisions without proper checks. The Truong My Lan case is now cited as a warning example, not only for Vietnam, but for global banking systems. Large-scale financial crimes do not always involve secrecy alone. They often involve legitimacy, positions of authority, reputation, and unchecked power. This case demonstrates that economic crimes can cause damage on a national scale. The losses were not abstract numbers. They affected depositors, investors, and public confidence. Financial systems rely on trust, but trust must be supported by verification, oversight, and enforcement. Without those safeguards, even the largest institutions can be compromised. The $44 billion bank fraud was not just a criminal case, it was a systemic failure. If you want more serious financial crime investigations, banking scandals, and real-world fraud cases, subscribe to the channel and comment below. What reforms are necessary to prevent financial crimes of this scale?